Welcome. Let's take a look now at some of the events to watch out for us traders on Thursday, the 2nd of November. And we start with data out overnight. By the time European markets get underway, we'll have known precisely what's going on in the Australian economy for trade numbers. We're looking for a surplus to narrow. We've seen some interesting trades around this Australian dollar. That's the weekly chart. Let me just focus in on where we are in terms of some of the daily candles and what's happening, because I've drawn this line here at 63 cents, which has been the completion of this double top pattern and the projection, as we saw, it dropped below the neckline. That was my price target. I've rounded it off, so it takes into account the nice round figure. But that is an interesting line of support. If we see anything that suggests that the Australian economy is finding it going even more tough, which I think is the case at the moment, because it's still finding the full effects of the interest rate rises that we've seen. If we see it disappear below this line of support, you've then got the next line of support, which is the low we had here back on the 12th of October last year at 61.70. And I think that could well be the next price target if we see a break of the 6,300. But of course, if we get at something that's far stronger, then that would be a better indication. But like the New Zealand economy next door, the Australian economy is finding it going tough in the face of higher interest rates. Let's move on and take a look at what else is coming through, because we've got unemployment rate on the German markets. I think it's worth looking at the German DAX. This is always a good trading opportunity here for the DAX, because it is relatively volatile, and it is one of the markets that many traders do follow in the European trading day. We've got it disappearing below this line of support recently. We have seen a little bit of an interest, but if you look at the longer term pattern for this German DAX is rolling over, and I'm just waiting for it to break the 14,458 level. Technically, I think that's the interesting line of support to watch out for. If we do see the markets continue to rise, which I don't really think is the risk here, you'd be looking for a close past the 14,943 level. You've got to go way back here to see that point at the 28th of March this year. So that is of a sort of minor interest. But I don't really think that the DAX has got the capability of doing that. And I think technically we are more likely to break this line of support and then follow on down to a price target at 13,695. It may follow in the next week or so ahead, but I don't think there's much impetus on the upside, bearing in mind the direction of travel on the momentum and the general feel for this market. Moving on, here in the UK, one of the big swing points to watch out for, following on from the Fed on Wednesday, is the Bank of England on interest rates. Like the Fed, it's not expected to move, but it's all about what the Bank of England says in the longer term. Current rates are at 5.25%. How long will they stay there? Will there be another interest rate rise coming through at some point? This is all part of the commentary we're expecting. And for this, I want to take a look at what's happening with sterling. This is against the euro. I've chosen it against the euro because I wanted to keep away from the dollar, which of course is the area of the market where there will be all sorts of interest. We've seen this high here back on the 26th of September at 87 pence per euro, which it broke, and it's now resting on the 200-day moving average. It's still got around about 24 hours before that interest rate decision, but no change expected. But it'll be interesting to see. At the moment, we've got a little bit of interest buying sterling. This is euro down against that slightly stronger sterling, but I don't anticipate it much moving from here on until we get that announcement tomorrow on Thursday, the 2nd of November. In the US, there's the weekly jobless claims. We're looking at the euro dollar for that trading opportunity, possibly, but I won't look at that now because I think that really is going to be steered by the Fed interest rate decision later on today. So let's roll on and take a look at what else is due to come through. In terms of some of the corporates worth looking at, we remember earlier in the week we saw some disappointing numbers coming out from BP. Will we see the same impetus and same travel in terms of direction for BP's Shell stock? Now, I've got this line here at £26.13, which is the line of support to watch out for if we do see some dire numbers coming through from the company. That was the high that we saw there back on the 8th of March. I saw an interesting article at the weekend suggesting that there is still one more big deal in the oil sector. We saw recently with Pioneer being bought by ExxonMobil and Hess being soaked up by Chevron. There was an article at the weekend suggesting that Shell could get it together with BP. Now, that would be an enormous deal, and it might actually fly in the face of a lot of market concerns about too much control. But that's an interesting proposition. But at the moment, at least Shell, which owns the old British gas group, is now on the way down. Technically, we're looking here for a support at 26.13. We'll have to see what happens when we see those numbers out at 7 o'clock on Thursday morning. It'll also be joined by BT Group, another interesting stock. I won't bring up this on a daily chart, but you can see the weekly chart there with that stock bumping along the bottom. In terms of the retail sector, Sainsbury's is another one worth watching. Again, I won't look at this stock particularly, but that's the direction of travel there for Sainsbury's, and it's fighting against all this price inflation in the sector. In Germany, Deutsche Lufthansa, another stock to watch. We'll be covering tomorrow on the early morning call, so watch out for that. Another one I won't look at the moment. But I do want to take a look at this stock. It's Apple. We've got the company being releasing earnings after the bell tomorrow, along with Coinbase Global, Starbucks and Moderna also coming out with numbers. That's the weekly chart there for Apple. In terms of the daily chart, you can see here that we've got this downward facing pattern at the moment where we're seeing these lower lows. I'll just draw that on there to give you the idea of support. And that is what's going on there. Now, this is an interesting pattern. This is a downward facing wedge pattern, which under normal technical analysis rules, if that's the right way of looking. If you get 3 touches on both the line of resistance and line of support, that then means it is a bullish wedge. Now, a bullish wedge would mean then you get a breakout on the upside here at some point, and you measure the height of the wedge at some point along there. I don't think it's too much to necessarily to get too much of an accurate picture here, because it is all about rough ideas. If we were to get a break, you take us then on pretty much up to these highs that we saw in Apple stock back on the 18th of July after it made that 60% rise from the lows we had at the back end of the year, at the beginning of this year. So that is a technical pattern building, but it's all about the fundamentals when the company reports earnings after the bell. And like Moderna and like other stocks that we see all trading all sessions, you can trade all sessions Apple after the trading day finishes on Thursday. And I'll be following up on Friday morning what happens with that stock. In the meantime, that's where we stand at the moment. We're awaiting the Federal Reserve interest rate decision, but do join me at 7:30 tomorrow morning on Thursday for the European early morning call.